Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Patsati, and in Let's Talk Bonds, I take investors and financial advisors through the best fixed income options available for investing in the present and again fixed income environment and given future outlook for the markets. And in this edition of Let's Talk Bonds podcast, I'm going to talk to you about how corporates India is able to raise long-term funds at cheap levels, despite the outlook for interest rates being very negative, and despite the fact that government bond yields and all other bond yields have shot up substantially over the last 1.5 years. With this, even if corporates have been able to raise funds at good levels, shows that there is a good amount of demand from investors for uh, pay for good bonds to invest in. And they're not very willing to fund the corporates at cheaper rates as long as they're able to get their whatever the returns they are seeking. Before that, INR bonds partner program partner page is available for financial investors who can just come on to inrbonds.com, check into the partner page, see all the bonds available and the information for investments, and transact for the clients through the partner through the partner sign in, and help the clients and investors get the best bonds available in the market with the most information, research, and with our own proprietary risk rating model. So log into INR Bonds and sign up for as INR Bonds partner.
As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. Now, with INR bonds, buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.
Back to Let's Talk Bonds. Uh, we we have seen now in the last few weeks 10-year corporates have been issuing 10-year bonds. We had HDFC coming into issue at below 8%. We have had Bajaj Finance issuing at below 8%. They have had now Tata Capital issuing it at below 8%. Fullerton issues over 8% levels. Then you had Shriram Transport, which is again seeing a lot of interest in the retail segment of the market, issuing 10-year bonds at well over 8% levels. And Shriram Transport is one example where even though the short 3 and 4 year or some of the 5-year bonds are trading at closer to 8.5 levels, the 10-year bonds they have been able to issue at around those levels, indicating that there is still good amount of demand for long-term paper by investors. So should investors invest in such long maturity bonds at a cheaper rate, because the 10-year government bond yield is at 7.4% annualized. And at these levels, which is about just 0.6% or 60 basis points, in some cases, 40 to 80 basis points spread over the 10-year bond. And given that state development loans are at closer to 7.7 or 7.8% annualized, and it's very low in terms of the spread available over such government papers. Even the Bharat Bond ETF is closer to 7.5%, and that is the index of the all the best PSUs and the most highly rated PSUs in the market. So are these bonds good for investments? They have a lot of flavor with insurance companies and provident funds who are looking to deploy long-term funds and want better yields than government bonds. While for investors, retail investors who are conscious of the returns they're getting, these bonds may not be the best options available for them. And they might not want to lock into, say, just about 8% returns for the next 10 years. because inflation and interest rate outlook is still very, very negative. So hence, while corporates will raise funds, all this money will go to insurance. I mean, all these bonds will go to insurance companies and provident funds, and they will not really come out to trade. Maybe some of them will. Investors who are looking to invest in long-term bonds can wait, and if they get some good levels when interest rates are moving up, then they can look to invest in such bonds. Thank you for listening in. Do not forget to follow us on all podcast channels, as well as investors can download and advisors can download our app, Quick Invest by INR Bonds, for the best curated bonds available in the market with the most information, transparency in prices, and the easiest of in-app investment process. Download the app now.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.